Do you hold Bitcoin still?
Barely, which I know everybody hates, right? Barely. Not because I don't like Bitcoin or don't think it goes up. I just think it goes up less.
Yeah.
You know,
yeah.
We're looking at this as a technology and a network adoption model. So you want to back the network that's growing the fastest and has the most number of applications.
Yeah.
That's the safest, easiest allocation. That happens to be ETH. Now, other earlier stage tokens, whether it's Solana or AVAX or whatever, are getting earlier on the adoption curve. So you get that accelerated phase. So they'll probably outperform. But if you're just thinking the safe, easy bet, we're now looking at the internet. The money of the internet is ETH currently. Nothing is exchanged in
That's
Bitcoin.
Right.
I mean, literally nothing. So the money of the internet is ETH. DeFi is built on ETH. NFTs are built on ETH. All of this is being built on ETH. ETH now has a yield.
Yeah.
Stable coins are on ETH. And ETH has a yield. Okay. What's left? Yes, it's not fast enough. So people go to other chains for that. It's a bit more expensive. People go to other chains. But the broad encompassing of the space, this is the simple, easiest bet to take.
Hello and welcome to Money Talks. In today's video, CEO of Real Vision and popular crypto expert Raoul updates about the ongoing situation of the global economy, massive Ethereum supply shock incoming, and his opinion on Bitcoin and other cryptocurrencies. Raoul also shares his outlook on inflation, Fed's policies, and interest rates that are rising, and makes a historical comparison of the current macroeconomic landscape. Make sure to stick around till the end of this video where Raoul reveals key entry points in Ethereum for retail players and the possibility of Ethereum flipping Bitcoin. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on post notifications. So without wasting any more time, let's dive right into the video.
So I'm going to make it easy for people. Everything is about supply and demand. Right? The more supply there is, the cheaper it is. The more demand there is, if supply is stable, the more expensive it gets, which is why we've had the problem with prices, because there wasn't supply of oil, but there was demand as everybody came out of pandemic. So what have we got going on in ETH? We've got a gigantic supply shock. So what is the supply shock? The small supply shock is right now, every day, miners are selling ETH. They probably sell 80% of everything they receive because they need to pay for their cash flows and their electricity and all of this stuff. So they stop. That's about 1 or 2 billion a month. Okay, that's nice. But then after that, we've also got the fact that staking's coming.
Mm-hmm.
Currently, there's about 9% of all ETH staked. Now, estimates are it should go up to around 30%. What does that mean? It means 30% of the ETH comes off exchanges, comes out of DeFi, comes out of CeFi, and is untouchable.
Yep.
Right? You're removing a gigantic amount of supply from the market, and it's locked for a year. So you can't do anything about it. Yes, you can trade using staked ETH and stuff like that, but it's not the same thing. So you've got this. So you're taking that out of the market. So you've got a huge supply shock. On the other side, you've got a massive demand shock, which is firstly, a lot of institutions wrongly didn't like Bitcoin because of ESG concerns. Proof of stake gets rid of that. Additionally, it now has a yield. So that's something that institutions love, is a yield. So now you need to make one asset allocation decision, which is, I believe in this Web3 technology world. So where do you allocate? Bitcoin or ETH? It's going to be ETH. Why? Because you're going to get something between a 6 and a 10% yield.
That's right.
So that's extraordinary. Yep. And you've got this deflationary issue of burning the tokens based on network activity. So that's another massive supply shock. So there's less ETH around every year. It's getting locked up. And you've got no miners. Put against this massive demand shock, and we've got the macro cycle turning. I look at this and think, holy shit, this is a massively imbalanced supply and demand situation.
Macroeconomic expert Raoul says Ethereum is set for a series of supply shocks that could help second largest crypto asset by market cap vastly outperform Bitcoin once again. In a new video update, the Real Vision CEO says that Ethereum's shift to a proof-of-stake system, which is tentatively set to happen in September, will likely eliminate significant amounts of sell pressure as participants take their coins off the market and stake them for yield.
First, are we in a recession?
Yeah, probably. You know, I know everyone on Twitter's flinging poo at each other, whether it's a recession or not, and the government stepping in. But basically, 2 quarters of negative GDP, not good. Usually that's given a 100% chance of a recession. We haven't had confirmation yet from things like the ISM survey, the Institute of Supply Managers survey. That usually drops to about 47. I'm expecting that in the next month or two. And then we'll be definitely there. So we're there or thereabouts. It feels that way. The markets have traded that way. We're seeing job cuts coming. You know, we're seeing a lot of evidence, and even the bond market's starting to tell us that. So it feels that the recession is here.
In addition, Paul speculates that Ethereum will benefit from the absence of miners selling down the price in order to pay for their operational costs, such as in proof-of-work blockchains. What's really interesting here is the supply reduction of a really monumental proportions that's about to happen. There are no miners anymore, so therefore all of the activity of miners of selling the tokens that they've earned, they probably sell 80% of the tokens that they get just to fund their own activities. That's about $1 billion or $2 billion a month. That's out of the market. So that's a small supply shock. There's no ongoing pressure every day for miners who've been rewarded with Ethereum. Then, the staking activity, there's currently about 9% of all Ethereum staked by most guesses. But either way, it's going to attract a lot of capital into staking. And so, that becomes very interesting itself, because if it gets up to 30% of all ETH staked, that's 30% that is dormant. And that 30% cannot be used for DeFi or decentralized finance, CeFi, centralized finance, rehypothecation, shortening, liquidity provision, nothing. It's out of the system, okay? And that is a massive supply shock.
Okay, firstly, the thing that gives you the best guide is something called the ISM survey. And you can Google it, you can find it, it's publicly available. And that basically, anything above 50, the economy's expanding. Anything below 50, it's kind of stalling. And anything below 47 is a recession. And that's been going since about 1947. It's an incredibly good indicator and really useful. So think of it as a kind of weekly version of GDP. So that gives you a very quick ballpark. And what's really interesting that no economists figure out, and I don't understand this, is it goes up and down. It's cyclical, right? Economists have linear projections. It's like, really? You can show a small child a chart of GDP and they go, well, it goes up and down. So what it does, if you see it going down and crossing 50, you know we're likely to be headed into a weak patch or a recession. If it's coming up from the lows, we can start looking forwards. So that's a really simple guide. The other way is the bond market's usually very good at this. So once yields start falling, bond markets are generally derive their price action from 2 things, GDP growth and future inflation. So if bond yields are rallying, it's saying that GDP is probably slowing down, i.e. there's a chance of stimulus to come and bonds look a safe haven. And secondly, that inflation is likely to come down in the future. So those 2 things alone give you pretty much all you ever need to know. Now, what's really interesting, the second degree of all of that is there's a bit of magic. So you look at this ISM survey, you go, well, how does it help me with my equity allocation or my allocation? All you do is turn it into a year-on-year chart. And all of the year-on-year charts of every asset, from oil to bonds to commodities, to copper, to equities, to emerging markets, to credit spreads, are all the same chart. They're driven by the business cycle. And some things are pricing in more right now and others are pricing in less. So the bond market's pricing in less, as is the oil market. But things like tech stocks are pricing in an ISM of 35, which is a deep recession.
Paul also says that Ethereum could end up becoming a deflationary asset post-merge and compares it to upcoming tokenomics to a stock buyback that increases the demand and decreases the supply at the same time. The former Goldman Sachs executive says that the charts support his hunch that Ethereum is about to outperform Bitcoin. According to him, ETH Bitcoin is getting ready to break out of a multi-year descending channel, making Ethereum a far more interesting bet for the macro investor.
So yield curve control is only applicable when yields are rising, right? But we're both talking about a recession where yields are falling. This is why dollar yen is now going down, i.e. the yen's going up. Why? Because the Japanese, the yields are just starting to ease off, so they need to buy less bonds, i.e. sell less, create less yen.
Yep.
So it only works in that point. So when we go back in time, I find the best example of this is, it's actually the most similar time to now, which was 1947 to 1955. So 1947, why am I talking about such a long historic period that nobody knows anything about? It's because we came out of World War II with massive supply issues. So we had the same supply problem, and then we had everybody coming out of the military into the labor force. So that's the same as the pandemic. And what happened? Prices went up 20%. They then were negative 4%. And then they were sort of around the 3% mark for a period of time. And what the central bank did was, what the government did is fiscal stimulus. They knew the economy needed fiscal stimulus, which I think the US and all the economies do. We need to build the green infrastructure, the technology infrastructure, all of these things that have been abandoned for so long. Now, in a boom time, when the economy recovers again after this, you might want to cap yields and say, we don't want this business cycle that we've just had, where we have a boom bust again. So in which case, maybe they cap them at 3% or 2.5%. And what you're trying to do is have inflation running slightly hotter, but not much, than your yields. Those negative real rates mean you should get productive return on assets if you do it properly. So I think it's coming. Europe is basically there now. Japan's been doing it for a period of time. And it's also been a function of demographics. They can't allow debts to rise because you blow up the whole system. And the European banking system's a mess as well. The US banking system's better.
So do you think inflation is going to get worse, or will we witness some improvements in the coming months? Tell us in the comments. Also, don't forget to like and subscribe. We'll see you soon with the next video, and thanks so much for watching.